AMD has already achieved what many thought was impossible. It transformed itself from a company fighting for survival into one of the most important players in the AI revolution. Today, it powers some of the world's largest data centers, competes in the fastest-growing segments of semiconductors, and has become one of Wall Street's favorite AI stocks. But here's the problem. The higher a company's expectations rise, the harder it becomes to keep exceeding them. Over the past few weeks, analysts have become even more optimistic, raising price targets and betting that AMD's AI business is only getting started. Yet the market is no longer asking whether AMD can grow. It's asking something far more difficult. Can AMD execute well enough to justify the enormous expectations already reflected in its valuation? The upcoming AI event and the next earnings report may provide the first real answer. In this video, we'll look beyond the headlines and break down AMD's business, competitive advantages, financial strength, and the key risks investors should understand to determine whether AMD is still one of the most compelling long-term investments in the AI era. The reason expectations for AMD have changed so dramatically is because the company itself has changed. Just a few years ago, AMD was known primarily for PC processors and gaming chips. Today, its business is powered by four major segments: data center, client, gaming, and embedded. More importantly, AI has become the new growth engine connecting them together. As cloud providers invest hundreds of billions of dollars in AI infrastructure, AMD is no longer competing for a shrinking market. Instead, it's competing for a share of one of the largest technology investment cycles in history. And that's exactly why investors are paying much closer attention today than ever before. The biggest change at AMD isn't just higher revenue, it's a completely different business mix. For years, AMD's growth depended on consumer PCs and gaming, two markets known for their cyclical demand. Today, the center of gravity has shifted toward data center and AI, where demand is being driven by hyperscalers building the next generation of computing infrastructure. This transformation has fundamentally changed AMD's investment story. The company is no longer valued for what it has achieved in the past, but for what investors believe it can become. And that's why every new AI product launch, customer announcement, and earnings report now carries far greater significance than ever before. One of the biggest misconceptions about AMD is that it has to beat NVIDIA to succeed. It doesn't. The AI infrastructure market is expanding at an unprecedented pace, with cloud providers investing hundreds of billions of dollars to build next-generation data centers. In a market this large, AMD doesn't need to dominate, it simply needs to execute well enough to capture a meaningful share of that growth. For long-term investors, that's an important distinction. The investment case isn't built on AMD becoming number one. It's built on the idea that the AI opportunity is big enough for more than one winner, and AMD is positioning itself to be one of them. AMD's competitive advantage isn't built around a single chip. It's built around an ecosystem of technologies and long-term customer relationships. The company now offers high-performance CPUs, AI accelerators, adaptive computing through Xilinx, and networking solutions that address a wide range of data center workloads. This broader portfolio allows AMD to become a more strategic partner for hyperscalers, rather than simply another chip supplier. But perhaps the biggest advantage is execution. Over the past several years, AMD has consistently delivered competitive products, expanded its presence in the data center, and earned the trust of some of the world's largest cloud providers. In the AI era, that credibility may be just as valuable as technological innovation itself. For years, AMD was known for impressive innovation, but its financial performance often lagged behind the market's expectations. That narrative is beginning to change. As the data center business becomes a larger part of the company, AMD is generating stronger revenue growth, improving profitability, and expanding cash flow. Higher-value AI products are also helping shift the business toward a healthier earnings profile. This is an important milestone for investors. A great technology story can drive excitement for a while, but over the long run, stock performance is driven by financial results. And today, AMD is starting to show that its improving fundamentals are catching up with its AI ambitions. AMD is no longer trying to convince investors that it belongs in the AI conversation. That debate is largely over. The real challenge today is expectations. As analysts raise their forecasts and investors assign a higher valuation to the company, the margin for error becomes much smaller. Every product launch, every customer announcement, and every earnings report is now measured against increasingly ambitious expectations. Ironically, this is often the hardest stage for any great company. Success creates confidence, but it also raises the bar. And for AMD, the next few weeks could determine whether the company can continue exceeding expectations, or whether Wall Street has simply become too optimistic. Over the next few weeks, AMD faces two events that could shape the next chapter of its AI story. First is advancing AI, where investors expect updates on next-generation AI accelerators, software, customer adoption, and the broader AI roadmap. Shortly after that comes the earnings report, where the market will look for evidence that AI demand is translating into sustainable revenue growth and expanding profitability. For AMD, this is about far more than beating quarterly estimates. Investors want proof that AI is becoming a durable business, not just a temporary growth driver. After years of transformation, this may be the moment when expectations are finally tested against execution. The biggest question for investors today isn't whether AMD is a great company. By almost every measure, it is. The real question is whether the market has already priced in years of future success. AMD now trades at a valuation that reflects strong expectations for AI adoption, continued market share gains, and expanding profitability. That means future returns will depend less on optimism and more on execution. If the company continues to deliver accelerating revenue, stronger margins, and a growing AI business, today's valuation may prove reasonable. But if growth begins to slow, even slightly, investors should expect much greater volatility than they have experienced in the past. This is exactly why the next few quarters matter so much. Wall Street is becoming increasingly confident that AMD will be one of the long-term winners of the AI revolution. But markets rarely move in a straight line, and expectations often swing between excessive optimism and unnecessary pessimism. The market may be underestimating AMD's ability to expand its AI ecosystem, deepen relationships with hyperscale customers, and benefit from a growing demand for alternative AI platforms. At the same time, it may also be overestimating how quickly AI revenue can scale or how easily AMD can compete in every segment of the AI market. The opportunity is enormous, but so is the execution challenge. And that's exactly why AMD remains one of the most fascinating companies to watch over the next several years. No investment thesis is complete without understanding what could go wrong. For AMD, the first risk is execution. The company must continue delivering competitive AI products while expanding its software ecosystem and meeting the expectations of its largest customers. The second risk is competition. NVIDIA remains the industry leader, while Intel and several custom AI chip developers are investing aggressively to capture a share of this rapidly growing market. Finally, valuation itself can become a risk. When expectations are high, Even strong earnings may not be enough if they fail to exceed what the market has already anticipated. These risks don't invalidate AMD's long-term opportunity, but they remind us that great companies are not always great investments at every price. AMD has already proven that it can reinvent itself. What began as one of the greatest turnarounds in the semiconductor industry has evolved into a company competing at the center of the AI revolution. But the next phase will be different. Investors are no longer rewarding AMD for its potential, they're expecting consistent execution. Every AI product launch, every major customer, and every earnings report will shape the market's confidence in the company's long-term strategy. Whether AMD ultimately becomes one of the defining AI companies of this decade won't be decided by headlines or short-term stock movements. It will be determined by its ability to translate technological leadership into sustainable growth, expanding profitability, and long-term shareholder value. And that's why AMD's biggest AI test doesn't begin in the future. As always, this video is not financial advice. Please do your own research before making any investment decisions. Thank you for watching. If you found this analysis helpful, don't forget to like, subscribe, and I'll see you in the next equity research.